And for more on this, we are joined by Lance Solms, who is Managing Director at Itransact, to shed some light on this. Lance, thank you very much for coming to our program. When recession happens, we've been focusing on how it's going to affect all sectors of the economy. But the issue of investment, many people think about their wealth, their lifetime savings, and what's going to happen to them. What then do we talk when there's such a buzzword as recession concerning people's concerns?
I think the first thing one should talk about is people mustn't panic or overreact or have any kind of knee-jerk reaction. So remember, we've been in a couple of recessions worldwide. There's a history of recessions that will always recover. What people should be doing is having a look at their current strategy. And one of the easier strategies to follow in a recession is to keep your debit orders going.
When people get worried about market fluctuations, for example, when we take a look at the indicators, especially the value of the rand, from January, we were talking levels of 11 rand 69 or so, and in March we were talking about 12 rand to 13 rand. Today, it's a different ball game altogether. The rand has plummeted altogether now.
Yes. So again, coming back to investing, this is very important that investors are at all times fully diversified across all markets, because for those investors who are exposed to foreign currency will do well. So volatility sometimes is very good for investors, especially in a recession like this, and you can take advantage in a recession.
Now, should people be concerned when we look at investment behavior? What does one do during this period?
There are a couple of things you can do. Continue with your debit orders. That's important, because as stocks get cheaper, you're still buying in monthly, and that's called rand cost averaging, and you need to take advantage of that. One should certainly not get out of your investments. If one's not feeling comfortable with the markets, there's another strategy you can follow, and that is to invest in companies who pay dividends. And generally your large cap companies who are geared to weather storms like this. The other strategy you can follow as well is to invest in companies, and especially ETFs provide these kind of access points into stocks that are staples. In other words, food, the things that you and I generally will carry on consuming even in the time of a recession.
Yeah, we've got other graphs that are going to come and display on the screen. I want you to speak to them, because this is based on investment behavior as well as investment strategies that are available. Can you take us through that?
Yes. So in terms of falling markets, markets will always fall and they will always go up. So again, one of the best strategies for any investor is to constantly fund a market with a continual payment or a regular payment like a debit order, because then you're taking advantage of rising markets and falling markets at the same time.
Yeah. So now what happens during investments during this time, especially when the markets are volatile? Where do you place your money?
If you're just a regular investor, keep investing regularly. If you are a cash investor, in other words, you cash flush, you've been saving up for particularly this kind of time, then you would invest into equities, because generally they start getting cheaper. If you're already invested in equities and you're worried about the price of equities and you're worried about volatility in your investments, you can switch into less risky investments like dividend paying companies and large cap companies who are able to weather the storm.
We're talking about now people who are closer to retirement. What happens to panic? People who are close to retirement or going to be retiring soon, it's absolutely critical that they take financial advice. I can't stress that more than enough, because it is a very testing time, and there's so many circumstances that people have to consider at retirement that you absolutely need to take. This is the time to take financial advice. Now, Lance, when it happens that there could be fluctuations in the market, is there going to be a bounce anytime soon when somebody has made an investment decision to try and avoid their stock value to depreciate?
Well, look, you can never predict markets. I think that's the most difficult thing. But if you're patient through any market and you stand your ground and you don't sell off, that's the biggest risk you can take, is sell off, because markets always recover. History has proven that from time to time. Sometimes recessions last 3 months, sometimes they last 6 months, sometimes they can last up to 12 months. But to sell, if you don't have to sell, don't sell. People at the moment are just experiencing a paper loss, not a real loss. You only realize your loss once you sell, and you're selling cheaply and somebody else is buying your investment cheaply as well, and they're profiting from it. So again, caution is the reactionary word at the moment. Be very cautious, don't just react, and take advice. Can't stress that more.
Let's talk about the behavior that's elicited by insecurity and emotions, in as far as
the investment practitioner takes instruction from the person who has the wealth. What kind of, shall I say, approach shall one use when it comes to buying, holding, and selling?
Okay. The kind of approach that one should be taking is to be well diversified. What I mean by that is if you're well diversified across cash, bonds, property, offshore investments, and so forth, when a recession time like this arrives, not all of your asset classes are going to do badly. And if one's well prepared for all kind of market conditions, that's a better strategy to follow than try and follow one particular strategy and then you find yourself in a recession. Now one panics, tries to get out of that, tries to move into something else. So my suggestion would be to always be as broadly diversified as possible so you can weather out any kind of market cycle. Because remember, these market cycles will come and go. Good times will come as well. Bad times will come again too.
The problem of mental soundness and emotional stability during this trying time is something that you and I can just talk about it normally.
Yes.
But in your experience, you know that there are people who panic to an extent of even committing suicide because they
Yes.
had cashed in their investments because they feel if you had perhaps a pension fund of 4 million rand in January, and this time around you have only 600,000 rand, they would rather cash it and chow it, and after that they say, well, my life is over, I'm killing myself now.
Yes, that's true, and those conditions are very, very dire. The only way to avoid that sort of situation where one lands up in a position where you've suffered massive cash flow losses is to continually take some form of financial advice. I think a lot of investors out there try to go it alone, and a lot of people will say it's too expensive for advice, but I think the cost of not having advice can cost you a lot more at the end of the day. And if one's got a sound financial plan and has been with a professional planner, you will expect volatility like this, and you will expect a recession. So you'll be planned for it, you'll be prepared for it.
Lance, the issue of investment cost. These practitioners make money from investors. Is it now expensive to be shuffling your portfolio, and does it really, is it sustainable?
Well, yes, I mean, costs generally shouldn't go up in times like this. I mean, financial product costs are pretty cast in stone and set down for quite some time. However, if you introduce churning or any kind of movement into your portfolio, yes, you're going to increase your costs because you're going to be buying, and there's buying costs, and you're going to be selling, and there's selling costs. So again, one mustn't panic. One must first take a good look at it, take advice, be sure what one's going to do, and then follow that strategy.
All right. Thank you so much for talking to us.
Thank you.
All right. Lance Solms is Managing Director at Itransact. Let's now take you to